welcome back to the Stock Market Option Trading Podcast. I'm your host, Eric O'Rourke, and this is episode 154. In this episode, I'm joined by Brian Terry, a longtime trader, friend, and retiree, to talk about what trading looks like after retirement, or if you're thinking about retirement. We're going to zoom out from some of the technical stuff we usually cover here and get into how trading can add structure to your day, keep your mind sharp, and even serve as a rewarding hobby in retirement. We're also going to touch on risk management, trading communities, and the importance of having a trading plan and routine, plus a few hard-earned lessons along the way. Now let's get into it. All right, Brian Terry, welcome back to the show. How's it going today?
Good. How you doing, Eric?
Good. So I wanted to, lately on the podcast, we've been doing, I feel like, very specific niche trading things and very specific kind of like mechanics and technicals and things like that. Mm-hmm. So I wanted to zoom out a little bit and talk a little bit about trading in retirement. I know you are in retirement. You've been trading in retirement for a while. So I thought it would be good to help answer some questions. And some of these questions I get asked or have been asked over, the past year or so, but also some additional ones I've thrown in there because I think it's, something people should think about if they want to pursue trading kind of as a full-time thing. So we got a few slides here and maybe a dozen questions. And so I thought we would just go through it and get your take on this and if advice or other thoughts, I think it would be helpful for the listeners.
Sure. Yeah. Great questions, by the way.
Great. So first question is, what made you want to keep trading after you retired?
Yeah. I mean, I was, trading while I was still working. And once I retired, of course, you have a lot of free time, right? And what I tried to do is I didn't want to go back and work anywhere else. I wanted to work for myself. And trading was just fun to me. It's a great mental challenge, and it's very rewarding. So that's why I just said, I can trade when I want to, even though I trade pretty much the whole day now. And to me, it's fun. It's a great source of income. And, I've met a ton of nice people and talked to, a lot of great friends through trading.
Right. Yeah. And so it sounds like you've answered a couple more questions here. One of them is, how has trading helped add structure or purpose to your days? And also, do you feel like trading keeps your mind sharp? Yeah. And how so? I mean, obviously, it's not easy, and you're kind of, there's some level of having to keep up with what's happening in the world. And I think this is actually positive because I know, other people that maybe get into retirement, they just get stuck in watching the news, and you can get a real maybe pessimistic outlook if you were to just watch, especially in this presidential cycle and tariffs and Republicans and Democrats. It's like, it's been a mess. And I think if you trade long enough, you realize, hey, the market's probably going to go up, which is net positive. To me, there's a positivity about keeping your mind occupied as opposed to just resorting to the news.
Yeah, I mean, to me, it's kind of like all of this data, economic reports and stuff you hear is really cool because you can kind of apply it to your trading, right? Like interest rates are going to be cut. How does that impact your trading? So to me, it's kind of like you hear all this garbage news, but you can kind of weed out like what's important and how you can use it to your benefit.
Yeah, totally. I think I've learned more about the world itself and how the world works through trading, more so than I did in college or high school. And I remember taking basic economics classes, like supply and demand side things, that type of stuff. But the world, when you sprinkle in the Fed and money printing, and it's like, it's not what they taught us. And maybe because it's different now, but I think it's a never ending way to keep up with the world. And even if it doesn't matter how big you're trading, like just the idea that you're paying attention to something, and maybe you only trade one thing. I trade a lot of SPX. So I try to keep track of what would affect the entire market.
Right.
And which essentially, if you follow the S&P 500, whatever stock you're following probably is going to follow the S&P 500. So things like interest rates and, tariffs and things like that. but some people think it might be too stressful. So what would you say to someone maybe nearing retirement and who might worry that it's maybe too stressful or too
Yeah.
hard? What would you say to that person?
Yeah, I mean that's a great question. And what I would say is do a strategy or a couple of strategies that you feel comfortable doing, that you don't risk a lot of money. It's not going to impact you if the trade doesn't work out. If what I find where people that are totally stressed out, they're probably trading too big or they're
Hmm.
trading strategies they don't really understand. But if you pick, like one or two really good, conservative, high, they always say we want a high probability trade, right? You want to win more than you lose.
Right.
And if you find those strategies and become good at them, then the stress kind of goes away. I mean, it's losing on trading is part of the deal. The
Yeah,
best
that's
traders
really
and
important.
and so you could lose, 20, 25% of the time. But if you are making money on the ones you're winning, and that's to me takes a lot of the stress out. But if you say, I don't ever want to lose, that's going to be stressful. So you
Yeah.
just have to know it's part of the trading game is that there's going to be losses and you just have to manage the losses and have a better, win rate than a loss rate.
Right. Yeah, and I think trading small is definitely the key, and like you said, not to get hung up on losing. You are going to lose in the beginning, even if you get lucky in the beginning, which is actually probably worse to be
I
really
was going to
good
say
and be
that.
like, you're in some ridiculous bull market and you're buying calls and you're like you're a genius, and then all of a sudden things turn and now you're an idiot. But yeah, I totally agree. One thing I'll add to that is sort of choosing a time frame, and especially with the options trading, like if you're trading options that are, if you follow sort of the tasty trade style, where you're maybe selling options 45 days expiration, like you don't really need to look at a 5 minute chart, right? Like
Good
that's,
point.
you don't need that.
Yeah.
If you want a day trade, that's probably as again, I don't think day trading is really where you should start. I think maybe end of day, something you
Right.
can do that you can maybe put on a schedule. That's
Mhm.
kind of where I try to do all my stuff. Like I have a lot of end of day
You
trades,
do.
and it's like I try to just follow whatever system that says, oh, I should go long or short, and then I just make sure my size is in
Yeah.
check. So
That's
I think
huge.
establishing a time frame and even narrowing down to one stock or ETF and just start with one.
Yep.
And I don't know if we'll cover this on the other questions, but I think people think that trading you should be doing something all the time.
Right.
When the reality is if you buy a stock or an option or whatever, a credit spread, and it's 2 or 3 weeks expiration, at that point you're really doing nothing and you're
Right.
just letting the trade play out. And there's a lot of
There
nothing,
is.
doing
Yeah.
nothing, which is can be hard because the tendency is to
Yeah.
want to take action, when something's going on. But
Yeah. That's a great point.
yeah,
There's a lot of nothing.
there's a lot of nothing. All right, let's go on to the next section. What type of option trades do you focus on now in retirement? Can you just maybe walk through some of the things you're looking at each week?
Sure. I love to do some covered calls. I like to do them where I can, capture the dividend. That's probably one of my funnest trades, especially in
Hmm.
a bull market. I've been doing a lot of butterfly call spreads, which have been a ton of fun to kind of learn that strategy.
Hmm.
And the other one that I've kind of been doing probably the last 2 months in a lot of with a lot of focus is after earnings trades, doing credit spreads after a good stock has announced earnings, and then selling either a put spread or a call spread, mostly a put spread, and those
Hmm.
have worked out really well. So those are the ones
Nice.
that I like. I do a little bit of zero DTE just to practice. It's not my favorite. I do a lot of your, 7 day SPX trades in your
Hmm.
service. I like those. I do a 1 day kind of thing. So I
Yeah.
piddle around in a lot of different ones, but, and I also do a diagonal call, which is kind of like the poor man's covered call.
Right.
That's probably the bulk of what I do, but I'm always kind of, trying to look at, new strategies and learn them and see if they kind of adapt to my style.
Yeah. Yeah. How has your risk tolerance changed over time? If you mentioned just trading small, do you have a way of sort of gauging your risk per trade? Like obviously you're going to, maybe if you do 0 day, you might only trade a couple, one or two spreads or something like that. Like how do you figure out how much you're going to risk? Because a
Yeah.
covered call dividend capture, you're buying 100 shares. So there's definitely
Hmm.
more capital going into that.
Right.
But now we've been on the show, or you've been on the show before. We've talked about your dividend capture stuff. So even though you're allocating more capital, is the risk, quote unquote, lower with that, or how do you kind of vary
Yeah.
your risk across these
Well,
strategies?
well, on the dividend capture, I'm trying to do in the money cover calls where it gives us, a certain amount of downside protection. But, there's more capital, so percentage wise, it's the same amount of risk, but it
Okay.
could be more dollar wise, more reward, more risk. But the other ones, what I do is, I determine like how much of a loss, max loss, am I willing to take on a trade. So if I'm
Hmm.
doing a poor man cover call, I know how much, so then I'll build the number of contracts to absorb that loss. So I don't try to overtrade. I think that's kind of the worst things you could do is kind of
Yeah.
say, because if you have a loss that's bigger than your risk tolerance, that really hurts, and you lose a lot of confidence and it's not near as much fun kind of thing. So that's what I would say is figure out like what's the most you're willing to lose on a trade. And
Right.
can you, I heard someone a long time ago say, when you do the trade, write the check. This is how
Yeah.
much this check. And if you do that, you've kind of, said, okay, if this doesn't work, this is what I'm willing to risk on the trade.
Yeah.
And your sizing will be based on that.
Right. Yeah, and I'll just kind of add on to that. I think it's from that book, Trading in the Zone, the Mark Douglas book. There was a good example in there of he termed it accepting the risk. So if you say I'm going to risk $300 or whatever it is on this trade, when you're down in the trade and you're down $200, the urge to close it to reduce the risk that you've already sort of agreed to or written the check for, like you said,
Hmm.
that's where I think you can kind of get in trouble because I've seen plenty of trades where if you've done all your homework up front and you know, this is a high probability setup or whatever probability you've come up with, and I think I can risk, there's 300 in risk at this trade. Like just risk the
Yeah,
300. Don't
yeah.
change it. And it's the same with profit taking. It's like cutting your winners too short.
Hmm.
If you think the stock is going up and you're right, just let it go.
Yeah.
Like follow the plan. And that can be harder than
It's way harder, especially on
it's
the
way harder.
$200. I had a
Yeah.
trade yesterday, open trade, and it was getting within $10 or 10 cents of my exit point. And I was like, oh, should I just close it now?
Right.
And I didn't. And then today the stock's up like, well, it was Tesla. So it's up like $9 today. So I'm
Right.
like, I'm so glad I didn't. For that
Yeah.
extra 10 or 15 cents, it'll turn into a winning trade.
Yeah.
So,
Just kind of let it go. I know in the our trading group, we sell a lot of at the money put spreads when, during certain bullish conditions. And pretty much every trade you start out in the red. I don't know why that is. I mean, if you think about a trade, even if you buy a stock, the probability that it's going to go like you're going to be green in the trade the entire time is it's 50-50.
right.
So as soon as you start seeing that red P&L, you shouldn't panic because you should already have decided, okay, this is what can happen. A good example, we had a trade, it was a few weeks ago. I forget, we sold an at the money put credit spread, and the next day it just tanked. And it had 7 days expiration. I want to say it was a Tuesday, but I can't remember. And I was risking 300 which was the max loss. And we were down about 260 of the $300. And someone asked, hey, should we just close it? Now your opinion of the market would change, and now I don't think it's like I don't think this is going to recover. I just thought this trade's dead, and I'm
Hmm.
just going to leave it. Well, sure enough, so we got some ridiculous relief rally, and it actually went back, and I was actually able to get out. I think I did close it early because the recovery was so strong, and it was kind of a close call. But it ended up being a relatively break even trade. So to
Yeah,
to book the loss to save $40 would have been,
not work.
I mean, and then you think about mentally how that affects you, and you're
And
like, oh
I
my
was
God, why did I do that?
I was going to say, if you watch the trade after you closed it early and it wins, it really freaks you out.
Yeah, yeah, that's funny. So, do you have any issues with over trading? Like, do you ever feel like you're over trading or like, emotional decisions on
Yeah.
some of
I
your
mean,
trades? Because I know you mentioned a lot of things you're trading. So how
yeah.
do you deal
Yeah.
with that?
I
Or
mean, the way, I mean, I have overtraded in the past. And what I've tried to kind of evolve to is I want to have a plan written out before my trading day starts. And I'll say, these are the trades I'm going to look to put on today. And
okay,
if it's not on that list, I'm not doing it.
okay,
If an idea comes up, I might put it on my, hey, I'll look at this for tomorrow. But I don't try to kind of wing it as the day goes on. I have like a checklist and say, I want to add this strategy in and that, and also what stuff I want to take off that day. So it's really, that's helped me tremendously. I just have
yeah,
like a shopping list and say, okay, I want to do a one SPX trade at 220. Boom, at 220, I'm putting it on, but I'm not looking for them beforehand. You know what I mean?
right,
So,
yeah,
and the other thing is really, if you get a really good trade idea and it's not on your plan, then either don't do it or do it the next day or replace it with something. Don't just keep adding trades because especially like, if it's a slow day and you're like, oh, what do I do? Let me find a trade. That's over trading.
right. Yeah, trading out of boredom, impulse trade, or for me, what I always lose on is if there's a headline, I try to chase a move.
Yeah.
Like if I take the trade, it will lose, but if I don't, it will win. And it's just like you're just kind of guessing at that point. And
Yeah.
sometimes it's fun to ride a trend or something, but I think, we're kind of talking about stress here, being prepared and having a plan, like you mentioned, having a strategy and being able to walk away, I think is really important and probably
Hmm.
harder. Like you said, like, oh, like I have we have two trades for this afternoon. I'm pretty sure they're going to trigger because the market's bullish, but if for some reason the market rolled over and the moving averages crossed down, I just wouldn't take the trade. And I'd be okay not doing anything, even though I might have spent some time today stalking a trade or like, okay, 2 o'clock rolls around. Is it doing this? No. Okay. All right. I'm not going to do it. And then you just, sort of disassociating. I think this is one of the maybe transitional things if you go from working to retirement or somewhere in between is disassociating that time is
Yeah.
money. Like the more you do stuff, the more you'll make. And it's just not, it doesn't work out that way.
You're absolutely right. You have to get away from your computer. I mean,
Yeah. Yeah.
I'll go for a walk or go up to the gym or go in the pool or something,
Yeah.
just not to be staring at the silly screen all day long because
Yeah.
what'll happen is it'll just, you'll be there all day, all night, and that's crazy. I
Especially if
think
the market's like move, like if there's something happening and the market's really moving, man, is it hard not to jump in?
Yeah, and and I think you kind of said it. If you jump in, most of the time it doesn't work. So it's better to be, be analytical, be calm, kind of stick to a plan.
Yeah.
And that's helped me from being stressed.
Yeah. Let's talk a little bit about tools, routines, and just, staying consistent. What tools or routines help make trading easier or more hands off for you? What, like, and maybe even outside of trading, like, what are some routines or habits that you do around your day so that you can stay consistent with your
Yeah.
trading? Do you have
Yeah.
anything?
Well, I mean, I go to the gym pretty much every morning
Mm,
before, early, 5:30, 6 o'clock, just to, get started. And so come home and then I can kind of say, okay, now I can kind of focus in on the trading. And I look at, how did things move overnight and things like that. So you can kind of, be up on, what's moving, what the latest news is. And so from there, I want to look at what I have open to see what I need. Do I need to do anything and write that into my plan? And then these are the trades I want to add in, kind of thing. So
right.
that's the way I do it. And it seems to help because if I have a plan that's written, I'm not going, oh, what do I do next? It's like at 2 o'clock I do this,
Right.
that kind of thing.
Yeah, now I know you put out a watch list each week to our
Hmm.
group for a lot of the trades that you put out. So this kind of goes to the next question about pre-planning trades each week, or do you wait for something specific? I'm assuming you kind of have a plan, but then you might wait for the day
Yeah.
of to kind of see. Obviously, maybe there's an FOMC announcement or, we wake up and there's a new war has started and the market's just going nuts, like are those some things that might put you on pause,
Yeah, absolutely.
like geopolitical or just surprise events,
Yeah,
like yeah.
yeah, I mean, you said it. Like if you wake up and there's been a tweet that's sinking the market, well,
Mhm.
then you're definitely going to put things on pause. There's no reason to jump in when the market is just not predictable. So a lot of times what I'll wait is say, okay, let me give it another hour to see did the market kind of settle back down. And a lot of times it has. But, I try to kind of know what's going on and avoid when things that are going to just add extra risk to the trade.
Right. Yeah, that makes a lot of sense. Now, you and I met through an options meetup
Hmm.
in Central Florida, and before COVID. I think it's when was that? It was
Gosh, I think that was like 2017, maybe.
so we're
Something
going on
like
7, 8 years,
a
right?
long time. Yeah,
Yeah.
it's been, it's funny, a lot of the same people that started are still active traders,
Yeah.
which is pretty cool.
Yeah. And so I think I want to talk a little bit about the community aspect of trading. And we were doing it sort of in person, and we would meet at the
Hmm.
library and we were teaching some things and we'd have other people speak, and it was a lot of fun just to kind of talk to people about
Yep.
it, and people would come to the table with maybe something they saw or video or some strategy or stock or whatever. And then COVID hit and it kind of, dampered a lot of that. And we
Hmm.
haven't really gotten back to in-person community meetings, partly because I think it's hard to pin everybody down on a certain day or time of week. But with that said, I think there's a lot of value in being inside a community. Obviously,
Hmm.
there's a ton of online communities.
Right.
So for you, has being part of a group or community, has it made a difference in your trading? What maybe factors or what are some things you learned from just being in a community?
Yeah, I mean the biggest thing is to have people that are in the same journey, right? I mean, if
Mm,
because just talking to, your neighbor about trading, they'd probably roll their eyes. But,
right. Yeah.
I mean, and you can meet a ton of really fun, interesting people in trading. And I am probably on 3 calls, 4 calls a day with, answering questions or just talking to people about trading. And they're genuinely really good friends, and you
Mm,
can bounce ideas off them. You can learn stuff from them. And, when you're like in a trade and you're like, it probably doesn't happen to you, Eric, but like I'll be in one and I'm like, oh, what do I do? It's like, I'm here and there and all this kind of stuff.
mm,
And most of the time you know what the answer is. You just talk through it and do what you would have done. But having a community of people you can talk to and learn from and share with is critical. I think if you just traded and didn't talk to anybody, that'd be really lonely. My
yeah.
wife says I'm on the phone all day long, and I probably am, but it's
Right.
a lot of fun. It really adds to the fun and enjoyment of trading, in my opinion.
Yeah. And I've been running a community for a while now, and I think there's some accountability,
Hmm.
that happens where if I'm going to put out a trade idea, if you're going to communicate your idea, it doesn't have to be a trade alert, even if it's just like, hey, here's a trade idea, to be able to communicate it to someone who maybe isn't familiar, and it sort of makes you rethink and clarify what you're trying to do, and it may
Yeah.
not change what you're going to do, but at least you have some clarity there. So the bouncing the ideas off each other, I think, is really helpful, because there's plenty of people online, they're going to tell you that's horrible idea, a lot of negativity, you should do this instead, you should do
Hmm.
my idea instead of your idea. So
Right.
if you find the right community that's willing to listen to your idea, I mean, I might not know the answer. If you ask me like, hey, I'm thinking about trading IWM, I wouldn't have any very specific advice. I might tell you, hey,
Hmm.
well, how much you want to risk, what do what's going to happen if it goes wrong,
Hmm.
and some basic kind of things. But at least you
Yeah.
have someone who's letting you express your thoughts and ideas in a positive way. So being in a positive community, I think, is a pretty helpful.
Yeah, I agree 100%.
And it says it's probably pretty obvious, but why is it helpful to talk to traders who are in a similar life stage? And you mentioned it, like where you're at in your journey. If you're brand new to trading, you may not want to be in certain groups of
Hmm.
veterans. Like I've followed some groups and they're just so, I don't know if advanced is the right word, but so technical that I'm like, oh, for me to hang out with these guys and gals, like I would have to really learn X, Y, and Z before I
Right.
can even
Yeah.
communicate with them. So this
Hmm.
this group might be too technical or whatever. So, what kind of groups have you come across? Have you or maybe found that seem to work the best? Like what's the vibe or the how do they work to where you feel like they're worth, participating in?
Yeah. I mean, I would say one is, like you said, can't be too complicated. You want to be comfortable with what they're talking about and stuff. But the other thing is, you don't want people that are, like critical of everybody. You want people that collaborate more than criticize.
Right.
And so I think that's a big thing. And the online, I mean the in-person meetings really do that because it's hard to be the guy that is a jerk on Facebook
Right.
isn't going to necessarily do it in a face-to-face or on a phone call with someone. So I think you just have to have a community where people, trust each other and respect each other and, don't put up with, the bullies or and
Yeah.
not make it more complicated than where you're at in your trading.
Yeah. It's pretty amazing that someone would be so negative in this type of environment or this type of topic, I guess, because if you post a trade idea in even if it's a Facebook group or whatever, I know you still run the Facebook covered call group or what's
Yeah.
it called? Conservative covered calls.
Right, right.
So, if I join that group to learn what you're doing and then I say, oh, that's dumb, or you don't, why do you do this? You should have done it. Like, it's like, what's the point of
Yeah.
doing that? So yeah, you got to get rid of those people. And if you're in a community and you're seeing a lot of that and the community moderators or the people running it, they don't squash that, you probably just don't want to be in that community.
Yeah.
Get out of that Facebook group, get out of that Discord server, and just find it's better. I've found because I've I'm in a few Discord servers through software that I use. Most software companies will have their own Discord or some kind of group, and that's a different sort of bringing together of people as opposed to like a strategy group. Like we have our Alpha Traders Club, which is like basically an options trading group, but people who use certain software might be trading futures or something else. So you get kind of this weird mix. And so it's a different kind of dynamic. But if you find a group of a specific thing and they're supportive of that, I think that's how you learn. Like if you want to learn covered calls, join a covered calls group. Don't
Yeah.
join an options trading group necessarily. Like be
Yeah.
specific.
And the other thing is, it doesn't have to be a big group. Like you might meet, if you go to an in-person meeting, there might be someone that's just like you. And you could say, hey, do you ever want to just have a call or meet for
Hmm.
coffee or whatever? That those are just as valuable, I think.
Yeah.
Like I have a call once a week with two other guys, and it's just a small informal group. We talk about, whatever, and huge benefit.
Yeah. Very cool. So, last set of questions here. Looking back, now that you've been trading for ever, right? Or however many years, what are, we're going to kind of go through like, what are some things that you wish you knew before you got into trading? What are maybe some lessons you've learned along the way?
Yeah, I mean, I would say the biggest one is don't overtrade and trade what you know. So you don't feel like you got to learn, 10 strategies to start trading. Maybe it's just one, and get good at it and understand it and don't over. Because I mean, I remember back when I first started, I would have, pages and pages of trades. And it's really that gets,
Mm,
stressful. It's like, oh, what about that one, kind of thing. So if you have a manageable number of strategies and you kind of know what's going on, that's what I would start. Don't feel like you got to be like Eric and trade, a lot of different stuff. Just do one
yeah.
of them, and don't feel like, when you hear a good idea, you got to trade it. Just learn it. I mean, one at a time, and build from there. So.
Yeah. Yeah. I think one of the things that I would have maybe accepted or acknowledged earlier was the idea that you don't need to trade a bunch of different things.
Hmm.
Like you could, I've honed in a lot on SPX for my
Hmm.
options trading. And it's like the only real stock chart I need to watch. I mean, I still
Hmm.
buy some stocks and, I bought some NVIDIA the other day, more
Hmm.
investing stuff. But when it comes to my short term trading, I almost exclusively trade SPX now. And so I'm real focused on that. And,
Uh,
had had I listened to conventional wisdom of, well, you want to be diversified and, you want to, if you're trading options on different stocks and different sectors, and that's fine. But in the
mhm.
beginning, you can really just focus on one instrument.
You can.
And you might not get as many trades, but that's where you'll learn and get your confidence. And you're like, okay, well, if I can trade SPY, excuse me, SPY, well, then maybe I can trade QQQ.
Right.
And if,
Yeah.
the Mag 7 stocks make up QQQ, well, maybe I can focus on Facebook or
Right.
whatever, you can
Yeah.
kind of expand from there. So I
Yeah.
think that's something I wish I had sort of knew.
Yeah. The other thing I'd add, Eric, is, in your profession before you retired, or like, what you did it took you a while to get good at it, right? I mean, you didn't just walk
Yeah,
in out of college and like, oh, I'm a great engineer. It
right.
takes and it's the same with trading. If you kind of say like, okay, I'm a trainee and I'm going to learn this and I'm going to learn a little bit more every day and get better than I was yesterday. Think of it that way instead of, like, hey, I'm a retiree. I need to be able to like deliver, X amount of dollars per week in profits.
Yeah.
Focus on learning the craft and realize that you're a rookie in this stuff, and start small, learn it, and you'll get really good at it if you take those steps and build a great foundation.
Yeah, that's a really good point is, if you're retiring and you might have been an expert in your other field. For me, I was in IT and I did networking and like I started, well, funny thing is I went back to school in my 30s and started my career over. And I started at the bottom and then I did IT for 15 years and ended up in, pretty high level cloud infrastructure type of stuff.
Mhm.
So it was a never ending learning process. So
Sure.
now I was a teacher before, but knowing that I was switching fields, I wasn't going to go into my new career and act like, well, I was an excellent math teacher. So you guys should listen to me, like,
Yeah.
so I think there's a humbleness that you probably need to
Hmm.
think about, especially if you're really successful. Trading's gonna, like, you really got to leave that ego at the door
You
and
do.
go, I'm starting over. I don't know what I'm doing. I read the book. Trust me, the books don't always work right. The videos, the books, like it's a ever evolving kind of craft with
Hmm.
technology and expirations, and
Yeah.
it just keeps changing. But yeah, that's some good points about,
Yeah.
what to expect. Are there any common mistakes you think new retiree traders should avoid, or maybe you see happen? You see mistakes happen a lot,
I mean, the biggest one that I oversee is people that say, like, hey, I'm a retiree and I want to make X amount of dollars per week trading.
right?
And they say like that's my goal. Well, that might be a goal once you kind of learn your craft, but so setting, like, you know, unattainable goals is not a good idea. Just start small. Start to, just like I just want to learn this stuff. Maybe you don't
Yeah,
even put a trade on for a while. Maybe just do paper trades. Listen, to people and learn from them and then try it, so if you start that way, I think you have a lot better chance of being successful than if you say, like, if I'm not making 500 a week on this trading, it's not for me. Well, you're
yeah.
probably not going to make it
You're
because,
definitely not going to make it.
yeah.
The,
And
you're not
so,
going to have every week is not going to be a winning week
yeah,
or month. I mean,
or year.
or year. Yeah.
Yeah.
Yeah. And I think that goes back to disassociating. Like if you came from a career or salary or whatever, and you got paid every 2 weeks, like you do not get paid every 2 weeks in trading. You might get
Right.
paid huge one week and then you'll death by a thousand cuts for the next 3 weeks. You
Yep.
might give up half of your
Hmm.
monthly gains in the last half of the month off a couple, and then you feel defeated and you're like,
Yeah.
well, so there's definitely maybe an expectation, maybe lower your expectation. And I like what you said about kind of just like it's almost like you want to treat it like a hobby
It is. Yeah.
and just say, I'm going to do this. I'm probably going to lose in the beginning. And
Hmm.
that's okay if I can lose, $50 here, $100 there. And then maybe after a year, if you're just not getting it or it's just not working, then maybe you move on to something, another hobby, go learn golf or whatever. But I kind of look at it as like, and I mentioned golf because that's something that I want to pick up, but I know I suck at it. and I don't have the time right now to really focus on it. So I just haven't done it, right? Because
Yeah.
I like to win. Like if like I'm, if I'm gonna do something, I'm gonna do it. And I know that I can't like do it. So anyway, so we might be playing pickleball instead of golf because I feel like I can do that a little bit better. But anyway, yeah, lower your
Yeah.
expectations and just try to have fun with it so that you can do it for a
Yeah.
while.
I always tell people like, yeah, I've got a really weird hobby and it's trading options. And it pays, it's a great source of income, but I've been doing it a while, just like you, Eric. And but if you just start off like after retirement and say, boom, I want to learn this, I want to be a great golfer the first day you carry your clubs to the driving range, probably
Right.
not going to work, right?
Yeah, yeah. Yeah, I am not a good golfer. And that's something I want to do, but it's just not there yet. Let's wrap up with kind of just defining what success is for your trading. Like, what are some days or weeks you walk away and go, "Oh man, I did a good job last week." What are some of the things, but obviously if you made money, that's good, but to me there's a little bit more than that.
Yep.
What are some ways you define what you feel good about your trading besides just the P&L?
Yeah, I mean, besides P&L, I think, it's learning a new strategy and
Hmm.
being able to implement it and kind of seeing that be successful
Right.
is pretty good. I mean, I love to do the research, over the weekend. Like you said, I do a watch list and
Mm.
I do, spend pretty much, a few hours on Sunday just looking at charts, looking at the fundamentals and things like that. And to me, that's a lot of fun. And if I can identify a few really good setups for myself and the member, that's pretty cool. And just kind of getting a little bit more confidence in, what do these reports mean and what's the impact on, what's the impact of interest rates or the dollar and things like that. Those really help you beyond trading options. But
Yeah.
so that's, I think there's, I'm reading a book called The Five Types of Wealth, and they talk about, financial wealth, mental wealth, social wealth, that kind of thing. It's
Mm.
pretty enlightening. There's way more than just financial, and you want to make sure, and trading as a community or in a group really helps you in a lot of those ways.
Right. Yeah. Yeah. One thing that I've gotten better at is defining success as basically sticking to the plan that I put in. And and now I've really kind of embraced that more when I do veer from the plan. And sometimes it was the right move. Sometimes
Mhm.
I have a trade going my way and the plan might be to hold it to expiration. But then, maybe that expiration is an FOMC day. So you say, you know what? I'm just going to take my profit now because I don't want the
Yeah.
risk heading to
Yeah.
FOMC. Like, even though that logically makes sense and it's probably a good thing, there's a little part of me that's like, well, I didn't really follow the plan.
Yeah.
But I'm not beating myself up over
Right.
it. But when I really follow the plan, and I think the biggest thing is when the market starts moving and it, like the trade we're going to take today, the market's up, it's breaking to new highs. I'm about to go long at the very top, right?
Yeah. Yeah.
Like it inherently is a bad, like my contrarian thing is saying this, I don't want to chase. This probably isn't good,
Right. Yeah.
but I'm going to take the trade anyway. So whatever happens with this trade, I'm going to feel good that I actually
Yeah.
entered the trade, even though I didn't feel comfortable doing it, you
Yeah.
know?
I know at the end of the day, when I go and look at my list and I've checked off 80% of the stuff on my list, I'm pretty happy.
Yeah.
I feel like that's been a good day.
Yeah. Yeah, for sure. Well, this has been great. I hope the listeners have pulled some, nuggets out of this episode. I think it's always great talking with you about this type of thing. I think it was nice to kind of zoom out a little bit and just
Yeah.
talk conceptually and help, just anyone out there who's thinking about retiring or maybe picking up trading. Hopefully this was helpful. Feel free to come over to stockmarketoptionstrading.net, and Brian and I are hanging out over there online. You can create a free account and all that. And that's all I got. So anything else you want to add, Brian?
No, this was a lot of fun. Thanks, Eric. I appreciate you thinking of me.
All right, man. Thanks a lot. We'll talk soon.
Okay. Bye-bye.